Yeah, so the shareholders spoke. I mean, by the way, it's not a surprise to me. I was 95% certain they would like it because I meet with them and they were like, this is the most brilliant thing ever. Yeah, just keep doing this. So after that, we had a good week and then November 5th came and there's a red sweep. And all of a sudden you have a pro Bitcoin White House, a pro Bitcoin Senate, a pro Bitcoin Congress, pro Bitcoin cabinet. Bitcoin rages from 68,000 and 99,000. The short of it is we raised $10 billion in 4 years after our initial announcement. And that's like progressively work and learning. We're learning and the market's learning to trust us, right? We're building a relationship. My relationship's not just with my equity investors, it's with the convertible bond investors. You meet with a convertible bond investor, say, I saw you last quarter. I saw you, you yelled at me for this and this. I fixed this. I'll do this. We're partners together. I promise you I will do this. I'm not going to mess with your opportunity. I'm not going to hedge it. I'm not going to steal your trading opportunity. I will do this and this and this. The guy goes, well, and I'm looking forward to this future. The guy goes, thank you for your candor. $500 million order. 50. Like if you have trust and people understand you, they'll give you your money. So what happened next is we raised $13.5 billion in 4 weeks. And if you look at my tweet, my tweet this morning is basically, we generated about a $9 billion plus gain for our shareholders in those 4 weeks. We're making hundreds of millions of dollars a day. It's tricky for conventional investors to understand it because you're not capturing shareholder value creation via GAAP accounting because for two reasons. One, Bitcoin's indefinite and tangible, but two, in the history of 50 years of the capital markets, everybody's been on the US dollar standard, which is zero vol, zero ARR against the dollar. And this is the Bitcoin standard, 60 vol, 60 ARR against the dollar. So if you track the liquidity in the options market and in the equity market, there was a major shift in Q1 and early Q2 where a lot of the volatility in the options traders and equity traders, they basically hopped off a dozen Bitcoin mining companies onto MicroStrategy because the Bitcoin miners were going to the halving where their revenues get cut in half. I think that the whole idea of diversification makes sense when you don't know the answer, but you don't want to make a mistake. But I think in the field of engineering and in many fields in life, it's like when your kid is a good basketball player, you don't say, I think you should split your time between archery and jogging and swimming and basketball and football and hockey and 16 other things just in case. You tell them to focus on basketball and you build the plane out of aluminum and you don't diversify the steel beam into clay and bronze and balsa wood. Right? If there's an answer, there's an answer, and you just tell someone the answer. When you don't know the answer, you're like, yeah, we'll go to Vegas and gamble and pick anything, but don't bet more than 2% of your money. If you hold a dollar bill for 30 days, you're getting SOFR at 30, you're getting 480 basis points or something like that. If you hold $1 million worth of the S&P index for 30 days, you can get like 15% interest by selling the 30-day calls at the market. If you hold Bitcoin, IBIT, for 30 days, you couldn't sell the options until just recently, but now you can sell them and generate about 100% interest. If you sell the MicroStrategy call option at the market, it's 220% interest rate. Okay, just to hold the share. And so all of a sudden, what we've done is we've created a levered flywheel on top of a product which is already 4x as volatile and 4x as performant as the S&P. The result is our liquidity explodes, our options interest explode, and we do a convert bond in Q1. A week later, we do another convert bond. That's the first time in history anybody ever did 2 convert bonds back to back, 2 consecutive weeks. Then we do another one in Q2. Then we do another one in Q3. Then we do $1 billion of ATM in Q3. And then we start to get into a groove and we realize that at the end of the day, the market's going to rally around some leader. And you're either going to lead in a decisive way or you're going to sneak around and apologetically be opportunistic or you're going to hide and wait. So my point really is there's a disconnect between giving someone a piece of advice to make their life better and then saying, but I 98% don't believe in it. Where we are today is from desperation to opportunistic to strategic to identity. At this point, we're a Bitcoin treasury company. I'm on a mission. My mission is I'd like to see the entire world recapitalize on Bitcoin, every company, every family, every individual, every government. I think it's an economic protocol for prosperity. I think it's as important as English or fire or electricity or steel. I just think it's good technology. It's a good idea. We're reaching the fun stage. The next 4 years, I think, are kind of fun. We get to do a lot of interesting things to help people. Yeah, I think the middle of 2020, we're running a $500 million business with $500 million in cash, generating $75 million in cash flow a year, growing 0 to 5%, competing against Microsoft. Lockdowns hit. Our stock has 0 options, $2 million of liquidity a day. The options are worthless. The stock is worthless. We have no investor interest. We're stuck in a competitive trap. There's no way to crawl out of the competitive trap. We've got $500 million in cash generating 4% interest, and all of a sudden Jerome Powell cranks that down to 0% interest. And then everybody's locked in their home, and I'm staring at, and then I watch all the Magnificent Seven stocks double. And then you realize that if you're sitting there, all your capital is going to be siphoned off by the Magnificent Seven. All your human capital is going to be siphoned off by the Magnificent Seven, right? Even if you have a good product, it won't be a good product in 5 years once all your engineers quit. And so we're kind of stuck in a trap. So at that point, you have 3 choices. You have a fast death, just sell the company. And a lot of people do. 99%. I had 100 competitors, guys. 99 of them, or actually all 100 of them, sold themselves. You just exit. Or it's slow death. I have my $500 million. I'm just going to start to pay all my employees massive cash bonuses to not quit, retention bonuses. But you're just going to go through the cash at some point. You're not going to be able to get out of your hole. You're going to linger on as a zombie. Or you take a risk. And the risk is a transformational acquisition. It's like, when you buy VMware, it's like, can you buy a company that's growing 20 to 40% a year, that's a monster world beater company? And can you buy it for cash or buy it for stock? And maybe you have a new lease on life. And so we just decided we're going to lead. I mean, John D. Rockefeller decided to roll up the entire petrochemical industry, and he bought out all of his competitors, all of his customers, all of his vendors. And first he did it for cash, and they would say, okay, well, pay me this. He'd go to the bank, he'd borrow the money, and he'd give him the cash. And at some point, people in the industry said, Standard Oil stock is worth more money than the cash. And he just started issuing the stock. And Henry Flagler, of course, built Florida with Standard Oil stock. So we do that. We get to the 500 million. Bitcoin rallies, the stock doubles, the stock triples. Now we just have an opportunistic run. We discover the convertible bond market, and they want to give us $650 million in cash pretty much for free. And so now we hit upon this new stage where we realize we have a commodity that returns more than the S&P index that we can buy by selling our stock. So if you're an investor and I give you a return higher than the S&P, how much capital are you going to give me? Infinite. So we started doing that, and we sold $1 billion of that. And the short of it is we went from a $500 million investment to $10 billion of capital raise, and the stock, went up by a factor of 10 or 20. And then we got to 2024, and 2024 was by the way, I skipped the crypto winter where everything crashes from 66,000 to 16,000, but this is a half-hour podcast. So I'll just say, it was a roller coaster. We went up to 66, down to 40, up to 66, down to 16, back. But and that's all very colorful. So I just said, like, I don't think you're going to come up with 50 good ideas. When the SEC approved the ETFs, they didn't approve options. And so there's this point in the market where the market decides it trusts you and it wants to rally behind you. And we got to the point in October 30th and we just said, look, we're going to put the question to our shareholders. Do you want us to basically build this business or not? And after 40 consecutive Bitcoin purchases, after laying the foundation of a Bitcoin, development company, after actually rolling out the KPI of BTC yield, which is, we just sold $1 billion of equity. It was backed by 350 million in Bitcoin. We bought back the billion in Bitcoin. We captured 650 million in the arbitrage. That works out to 4%. That 4% is like a Bitcoin dividend to the shareholders, but we're going to keep it on the balance sheet, roll it forward and reinvest it. But the real point is we're buying Bitcoin with equity, with debt. We're refinancing the debt. We're at all points, generally, we're doing it in an accretive way. And we get to 2024, and then we discovered the value of volatility. I mean, really understand it. Because in January of 2024, Bitcoin isn't an asset class. And the second week, the SEC approves those ETFs. And then you start having the snide comments like, well, now we don't need MicroStrategy anymore. They're like just a proxy. They're like a clumsy ETF substitute. We'll just put our money into the ETFs. But what happened at the same time was the halving was coming, and all of the investors, the vol traders, went through a secular rotation, and they started selling the Bitcoin mining stocks and looking for something else to trade. So when that happened, our options interest exploded, and we became the #1 options market. Yeah, I think the end game is to securitize the entire asset class, securitize the asset class, and so when we say we're a treasury company, what we mean is we're the institutional bridge between a high energy, volatile crypto commodity, that thing we call Bitcoin, with 60 AR, 60 volatility. What that means is it's always going to be higher performance than the S&P index. It's always going to be more volatile than the S&P index. As it goes from $1 trillion to 250 trillion, as it merges, the S&P will adopt Bitcoin and their performance will drift toward it, and Bitcoin's performance will drift toward the S&P. But as long as we're sitting between conventional equity capital and this crypto capital, we can arbitrage the difference. And as long as we're sitting between, by the way, 60 ARR, 60 vol, and the bond market is 6 ARR, 6 vol, 5. So you have fixed income, which is 5. You have equity, which is 15. And the traditional market, you have this raw energy source, which is 60 in the crypto economy, which is 24/7, 365. No one can stop it. Chinese, Russians, Africans, South Americans, people can panic sell 10 billion of it on Saturday night through one of the 14,000th exchange in the world, or 1,400. So you've got this raw thing, and then you've got this traditional market